Let's get started. Michael, Isaac, welcome. Welcome to this borough-specific episode or recording of the New York City Market Talks. And today we're talking about the Bronx. The Bronx. So
happy to be here.
Yeah, this is good. And let's just start off. Bronx typically is one of the most active boroughs in Manhattan. There's a lot of investment sales there, and it's it's a big value add market where investors are typically looking for more yields. And when you're buying on a price per pound, price per unit, price per foot, it's the least expensive market. So you see a lot of investors who are looking to enter New York and grow their portfolios. And what comes with it is, in that borough, you have in some locations and some properties, it's more difficult to manage. So probably the number one topic across the whole industry coming out of coronavirus is collections.
Yeah.
So Mike, can you give us just a little bit of an update of, now that we're 90 days plus, between 90 and 120 days into this thing, what do collections look like in the Bronx?
Yeah, absolutely. I think, collections overall, there's definitely a wide spectrum of what we're seeing, and it really depends on the quality of the owner and the integrity of their management.
Mm-hmm.
I was on the phone earlier this morning with a gentleman who owns 5,000 units across the boroughs. We were talking Bronx Pacific. One thing I guess to talk about on the commercial side is, his collections there were struggling the most, obviously on the retail.
The retail tenants, right?
The retail's tough. So there's a lot of negotiating going on there. Those collections are definitely down. I don't have an actual percentage that he gave me, but
right.
For the residential side of it, he's saying, listen, I'm at 85, 90% collections.
Yeah.
Right. And that's because he's hands-on with his management. It's heavily vetted tenants, and his quality of tenant base is a little bit different than a lot of other buildings in the Bronx.
Right. So typically what I'm hearing in the market is that the collections, that's very high, for secondary and tertiary markets, which part of the Bronx falls into.
The average is probably around 60 to 70%.
Okay. Now, why is that, would you say?
Again, I think a lot of it comes down to the integrity of your management. How much are you talking to your tenants day to day? Who actually are these tenants in the building? Are they working class? A lot of tenants by nature in the boroughs are in the service-based industry.
Right.
You don't know that the service-based industry in that sector, that got hit the hardest from coronavirus. One thing to note that I think is actually pretty funny, going back to the conversations that I would have talking about deals, I would always get the question asked, how many Section 8 tenants, how many nonprofit tenants are in these properties?
Right.
It was kind of in a
negative light.
In a negative light. It was in a negative light. Now it's more in a positive light because, Section 8, you're collecting some rent from the government. These nonprofits are a little bit more sturdy than your standard rent stabilized tenant who might be hurting.
Right. Yes. So how do you think this plays through from an advice standpoint? I guess, Isaac, when you're, just on this topic with collections, what is going through, we've noticed that the number of transactions is starting to pick up, and we'll talk about those numbers in a second. But how are you advising buyers, or what are they saying to you when we know that, call it borough-wide, maybe the collections are in the 70s or high 70s or somewhere, they're, how are they thinking about it, and how are you advising them? How are you advising people to think about collections?
Right. So I guess split it into two kind of answers. When I'm talking to a buyer about, a given building or a given deal with regards to the collections, the kind of back to what Mike said, the length that the, previous owner had the building under management, who they used, how boots on the ground, if they were in the building every day or something like that, those factors give buyers a lot more comfortability with going through a deal. Walking through the building, interacting with tenants, you have to get, up-to-date collections reports every couple of weeks, which Mike and I have seen. And it's really deal by deal. The higher quality buildings out there, little deferred maintenance, they provide a great essential service and a place to live.
Yeah.
the buildings that are going to not only sell for a premium, but a buyer is going to be most comfortable looking at the historical payments and saying, there might be a couple tenants that are a week or so behind, but on the whole, I feel pretty comfortable that this guy's owned the building for 20 years. He hasn't had any collections issues in the past. And, when we get back to the new normal, this will be fine.
Well, it's funny that you mentioned that, because I noticed that a lot of the best buyers and the best investors, frankly, when they are thinking about things or walking through a building or whatever, they're asking non-financial questions. And that's what you're pointing to, or basically, there are other data points, but they're non-financial that have a big impact on the financial, right? So the quality management, I mean, you've talked about integrity of management, and I think that's really coming to light right now, because specifically with collections is the type of relationship or management, wouldn't you say?
Yeah, I mean, I think it's very important. I would, again, just being, like Isaac said, boots on the ground and talking to these owners. The one thing that we've been doing for landlords is, especially in the beginning, the first 30, 60 days of this whole COVID, quote unquote, COVID era from March and April,
right? That
was really when information was key.
Yeah.
And it's how am I going to get this information across to my tenants in a way that they understand it and can go get the necessary help, right? So what we did, and what we saw an opportunity to communicate with a lot of owners in the market, was provide them with templates to send to their tenants, so they can go get, whatever, it's a PPP loan or unemployment. And I know these things are out there, but how does it help me and how do I get it?
Yeah. Yes. Yeah. This is in times where things, in chaotic times, it's better to over communicate.
Oh, absolutely.
Right. Now, let's talk about the other category that I think is huge right now for buyers and also for owners who have loans, is what's happening with the lending market specific to the Bronx. What are you seeing in terms of how banks are underwriting Bronx properties? And how should I be thinking if I'm an owner and I have either a refinancing coming up this year or next year, or I'm looking to make a purchase, or, how are you, what should I know about the lending market?
Yeah, first, I would say first and foremost, even if it's a conversation of, hey, I want to sell my building, and, obviously the refi's 6, 12, 24 months out, the main thing that we're telling anybody is, have you spoken to your lender and what do they say? If you come to us and say, hey, I want to put my building on the market, my first question is, did you speak to your lender about this? And what are they saying about the refinance? Because the indication of how a lender is underwriting your deal, whether it's a refi or a purchase, it tells you how you're going to have to navigate the sale. So they're kind of taking a peek under the hood before you go to the market. The lending environment, collections, right? I think these banks are really stringent on, how much rent are you collecting over the past 30, 60, 90 days. They're asking for collections reports constantly, especially on the buy side. They're definitely underwriting to a higher vacancy.
Okay, so let's hit on this, because this is a big point. When you say underwriting to a higher vacancy, typically in the Bronx, I would see anywhere from 3 to 5%.
Correct.
Maybe you would see 7 on a really a building that had a bad reputation, a lot of violations, stuff like this. What are you generally seeing banks underwrite to right now?
8 to 10%.
8 to 10%. And for retail, they're almost giving you no credit.
Yeah, for retail, it's, I mean, how do you underwrite that risk right now? Because you just don't know. There's so many unknowns with that.
Yeah.
So it's pretty much zero. I would say to be safe, just 0.
Yeah. So this is, from my vantage point, this is going to have big implications on being able to refinance maybe the current mortgage you have. If you put these different underwriting standards on your current mortgage, it's not going to size. In the first phase, we typically see banks will just start extending mortgages because they don't want to deal with this stuff. And maybe if they can extend long enough, they'll get through through the trough that we're in or whatever. So, I think, Isaac, do you have anything to say? Like, how are you noticing the other part of the lending environment is that it requires buyers to come up with a lot more cash. So in a way, even though the prices may be coming down, the properties are becoming more expensive because you have to put more cash in. So
Right.
I don't know how are you seeing buyers, or the marketplace just respond to that?
Right. So I actually had that conversation earlier this week with a strong buyer. He's actually touring a couple of our deals, but he was saying kind of pre-COVID, he had a nice stabilized, no retail deal under contract up in the Bronx. He was retraded on the LTV down to 65%, and then also required to then come up with 6 months worth of reserves that he was forced to give to the bank up front.
Wow.
And so while, pricing may be coming down in the sense that you're not going to be able to get that 75% loan, you also have to come up with a lot more cash on the front end, whether it's in the form of, some sort of escrow reserve or just a reserve, to give to the bank saying, here's my next 6 months, 12 months of payments.
Right.
So.
Yeah. So these are, I think the overall issue that I see, and I see this really all throughout the marketplace. I mean, it's happening in New York. It's happening in other parts of the country too, is just in a normal market, all the players may not agree exactly on an NOI, but they can agree that the NOI is approximately some number. Mm-hmm. And right now, you have wildly different interpretations of what the NOI is. The owner of the building may discount the loss of collections. The banks are taking a very conservative view, so their NOI may be 30% different. And then the buyer may be somewhere in between because they want to be optimistic, but they've got to be conservative. So when if you really want to get to the core of the pricing disconnect, or it's about everybody being able to agree on an NOI.
Yeah, I happen to agree with that. And I think one thing that definitely gets overlooked, for some people gets overlooked, is when you look at the baseline expenses, everybody has a different underwriting standard. Yeah. And I think the most important things right now to look at is the city wants your taxes to be at a certain percentage. So if you have lower taxes, some guys are baking in that full 20% of gross upfront day one today because they know it's going to get there.
Right.
A big conversation in the Bronx right now, and owners are coming to me saying, hey, do you have any insurance brokers, and how do I lower my costs? Yeah. I was paying $400 a unit, and now I'm getting quoted $900 to $1,000.
Yeah.
It's not an easy conversation because it's tough to hear these types of numbers and increasing expenses, but the reality is that it's happening and expenses continue to go up.
Yeah. Well, insurance, we can do it. We may have to do a whole other episode on that, but that's for everyone.
That would be great.
The insurance costs, it's almost heightened in places like the Bronx, but it's all over the city. It's all over the country. Actually, what's happening with the insurance, that has to do with the reinsurance market is out of whack. And so, anyways, we won't dive down that rabbit hole today, but let's talk. So let's talk about the data. A lot of people, 30 to 45 days into this, were asking me questions about, what's the number of transactions? Is anything trading? Is the market completely seized up? Is it so? Go ahead.
I would say just the overall aura of, again, the quote unquote coronavirus era of March, April. The market was it was just gathering information, being boots on the ground and saying, how is this going to affect the real estate market, amongst other things. And people were definitely dealing with things personally because just of everything going on in general.
Right. So in the initial period, it's seized up completely.
Correct. Mm-hmm. Correct. And I think everybody really felt that because, again, people are working from home. There was a slew of things happening in the world.
Right. What about the last 30 days?
10 times of activity. 10 times the activity that we've seen. Mm-hmm. And I think, I don't want to say the floodgates have fully opened, but people have gotten over that, like you said, that seized up time frame. People are getting curious, putting in offers. We have 4 tours set up this week. It's, so people are starting to move and groove. I would say from a data perspective, January to present, mm-hmm. the market saw 36 transactions for about $150 million. Mm-hmm. One thing to note is, March to present, it was probably 8 to 10.
right.
Around that. So it definitely slowed down.
Yeah. So I would say in a normal year, 36 transactions in the first half of the year is very low anyways.
Very low. And that was over $1 million.
Over $1 million. Right. But so essentially what you're saying is the first 2.5 months of the year, the numbers of transactions in the Bronx were down because we're still adjusting really in this market from the rent laws of last year. And then when COVID hit, there was only about, a handful of transactions. But since that time, I think we're going to start to see some of the pent up demand. You have natural demand both on the buy and the sell side. And then also people who have just put off things now, they don't want to put them off anymore because life goes on. And the entrepreneurs who own buildings in the Bronx, many of them, their personal lives and their work lives are intertwined as one thing. If you own your own business, so you can't, if you make life decisions, you can't put them off forever. And I think between the rent laws, when you talk about who's selling the buildings, Isaac, between the rent laws and also that point that I just brought up about how a lot of these are family businesses and they're so intertwined, does that play to what you're seeing in terms of the seller profiles? Because that's one of the questions I'm getting from people is, well, who's selling today?
Mm-hmm. Right. So I think there are a couple different buckets in terms of the sellers, as we kind of discussed earlier. There are the guys that are taking pieces out of the portfolio and saying, I'm going to either consolidate into a certain geographic region of the Bronx or whatever borough, and I'm going to trade up and upgrade my location a little bit, whether it's selling in the Bronx and buying something in the Upper East Side, whatever it is. Those are some of the more sophisticated or pro sellers, I would say.
Yeah.
And some of the family offices, whether, they were on the fence, after the rent laws about selling and thought things were going to get a little bit better, they're now getting pushed to the point where whether they don't have kids to pass the business down to, they don't really have the bandwidth to deal with the city anymore. Mm-hmm. And they really just want to get out.
Yeah. Now, typically, when you see those, they have been long-term owners. So even if the price comes down, they have built up equity where they still sell.
They've built up equity, the delta, I guess, between, so one thing that we're seeing right now is the delta between what a seller wants today and what a buyer is willing to pay. It's still kind of far apart. I think for that category of sellers, they do have a little bit more room if they're really that motivated to transact.
Right.
Because they have owned it for a while. I think there's also a play in depreciation upon a 1031 exchange if they are fully depreciated. So there's things to play with there.
Yeah, that's really interesting. Well, look, we're gonna wrap it up. What is a typical deal? If you wanna name a street, but why don't you guys each describe one deal that you're seeing right now from a metric standpoint, so the people who are listening, whether they're interested in buying or selling, they can get a sense of what a typical deal is right now.
Yeah, absolutely.
We're all marketing.
Without giving out too much information, I would say that there's deals that we do have in contract, pre-COVID that we signed that will be closing in the next 30 to 60 days. And I think the reasoning behind that is it's a quality asset that's clean, that has hardly any deferred maintenance, and it's just overall the collections are still good. The quality of tenancy is great, and you're going in at well above a 6.5 cap.
Right.
When you look where debt is, it still makes sense. And if you have a lot of units in New York City, you look at a state, you look at 5.5, 6 caps, you're right in your backyard and you're buying good cash flow with good bricks. It still makes sense for a lot of people.
Yeah. Yeah. Isaac, what about you? Is there any kind of your typical down the middle deal that you would like to highlight, or what does that look like? One that we're marketing. What do the metrics look like?
Right. So we have a deal uptown on Decatur Avenue that's pushing towards a 6 cap where a deal can get done. You're going to be under around 9 times the rent roll. And I would say that's pretty standard. A lot of the buyers that are, whether it's a younger member of a long-term family coming forward, it's either send me anything above a 6 cap, or they throw the cash flow out the window and they're like, I've never had the opportunity to buy, say, at $100,000 a door, or I've never had the opportunity to buy at sub 8 times the rent roll.
Yeah.
And so those type of buyers are identifying themselves more and more. And we're seeing a lot of activity on these type of deals as well.
Yeah. Well, two competitive advantages that you just kind of touched upon is, that I think are really presenting themselves in this market is your ability to, if you have access to cash and you can close all cash, or you can close without financing, or knowing that, hey, the lending underwriting standards are going to be worse today, but if I buy it today, 2 years later, I'll be able to pull some of my cash out. So that's a competitive advantage. And then, the age old one in New York, which is just playing with time, which is when you talk about buying at a price per pound, that, investors who have the ability to be flexible with how long they plan on owning the asset or how they view time and the asset. Most of the most successful real estate investors they buy a building, they hold it for 10 years plus.
Absolutely.
And so, you obviously, if you double your money in 2 or 3 years, that's great. And that gets a lot of press, but over the long term, it's holding for the long term. And so being able to play with that is a big opportunity. And
now, cash is king. Cash is king.
Yeah, you're right. Well,
one of the things that we've been saying is if you're a buyer right now, your opportunity to buy at a low basis, if you're long on the city, the history of New York, you're going to make money, and this is an incredible opportunity for you. And we're starting to really see a lot of people come out of the woodwork and understand that.
Yeah. And on the seller side, with the uncertainty, if you do decide to sell today, you want someone who can execute.
Absolutely.
Right. And so it's almost, there are times, we talked about 9 non-financial metrics earlier. We've had a couple of deals that we've put under contract the last 30 days where the seller hasn't even picked the top bidder. They've picked someone who maybe was marginally lower in price, but better on terms, because you want certainty today if you're selling. So, well, look, guys, this is a great little update on the Bronx. Thanks a lot for doing this. Maybe we'll do another one in another 45 or 60 days. And
maybe in person, maybe not.
Yeah, exactly.